Hi everyone, how's it going? I got a new mic this time. I wanted to say welcome to episode 8 of Real Estate Talk with Randy Stedwell. That logo is not very good with Randy Stedwell. There you go. Uh, anyways, with that being said, we have our guest of honor, which is Malcolm Turner. Malcolm Turner is a commercial real estate, commercial um, commercial lender. And so for all of you guys out there doing multifamily, you want to use him not only for the lending portion, but also to help underwrite a deal, in my opinion. So I think he can help you tremendously in this. So with that being said, let's welcome Malcolm Turner. Malcolm, how you doing?
I'm great. How are you?
Oh, I'm doing awesome. So, got the new mic. You got the first episode with the new mic here. So, before
Cool.
it was just my AirPods. But I wanted to. So, you're a commercial lender. Is that
Correct.
correct?
That's correct.
So, with that, how can real estate professionals use you as far as being a broker and things like that?
In the context of a real estate agent or a broker, they can call me if they have a deal that they want to pre-qualify for
Okay.
financing.
Okay.
In the introduction, you mentioned multifamily,
Yes.
and when you're doing commercial, the focus shifts from the person to the property.
Okay.
So 80% of the underwriting is on the property,
Yeah.
and about 20% is on the person. You
Okay.
know, so I'm looking at, like example, I was talking with an investor this morning about their multifamily deal, and I was saying, hey guys, I need the leases because
Yep.
I don't care about your W-2s because you're not making the payment. I need the leases on this property so that I can see what kind of income is coming in, when the leases expire, are they month to month, that kind of thing, you know. So
Yeah.
because the property becomes preeminent when you're dealing with commercial, whether it be retail, office, warehouse,
Hmm.
it's the same bucket.
Okay. That's awesome. So, I just kind of jumped right into that. But so the good thing is that I kind of wanted to let people know out there that you're the person to go to for any
Mhm.
multifamily or commercial
Mhm.
lending.
Mhm.
Also, any commercial buildings, I highly recommend go through you as well.
Mhm.
If you don't know what you're doing, if you don't know what you're talking about, if you're another wholesaler that has a deal under contract and you need a second pair of eyes to underwrite it, by all means, this is the guy to talk to
Mhm.
because he will tell you whether there's a deal there to be had or not, or if you need in order for the deal to be had, you need a strong buyer for them
Right.
to be able to lend. Okay. Things of that nature. Now, let's kind of get back on track here. So, how did you get started in um, in the financial industry, and how did that lead you to real estate?
Well, I was doing residential. Well, you say real estate, you have to go way back. Um, I got my real estate license when I was 21,
Okay.
something like that. Working for Real Estate One, which is actually how I met my wife, because
Okay.
I worked out of the Real Estate One office in Lathrop Village, and she worked out of the Real Estate office in Detroit. Real Estate
Ah.
One office in Detroit. And just, give you a little comparison. This is in 1980, 89, something somewhere around in there.
Okay.
And interest rates for a 30-year fixed rate mortgage was 9.75% for a 30-year fixed.
And
You
we're
know,
complaining about 6 or 7%.
and people are losing their mind over right 6, 7. Oh my God, 8%. It's like, come on, man. Now here's the irony. Back then, when I met my wife, they had a big company meeting where they brought all the respective branch offices together, one big whole meeting at a hotel in Southfield,
Yep.
because Real Estate One that year, for the first time in their history, crossed $1 billion in sales.
1 billion. Sorry, I had to
And they were like, right. They were like,
go.
yeah, we're like the biggest, the best and they were the biggest in the state. I don't know
Yep.
what the numbers are now,
Okay.
but they were like, yeah, we're killing it. Next year's going to be even better. And this is in a 9.75% interest rate environment. We were selling
Yeah.
real estate like crazy. And so someone asked me the other day, as an investor, Malcolm, you're looking at rates and things like that and where things are going. And, when is the best time to buy? When
Mhm.
you find a deal.
Yes.
Because if I'm an investor, I'm an investor. It's what I am,
Yep.
right? I invest in real estate. So
Mhm.
should I buy this multifamily? And this is 2023. Would have been better for me to have bought it 10 years ago, 20
Mhm.
years ago, 30 years ago. Yes, there's been some ups and downs, obviously, in the markets
Yeah.
on a month to month, quarter to quarter, year to year basis. But if you got it 10 years ago, you're probably pretty good right now.
Yep.
Now if you bought it 2 months ago, that might be a different story, right? So you're a long-term investor, you buy for the long term.
Mhm.
When should you buy? When you can get a good deal, or when the deal even makes sense. Because sometimes you can't always kill it on every deal,
That is
you know.
true. That is true. Yeah. Sometimes you got to go for. Not every deal is going to be a smoking deal. You
Right.
know.
That's right. That's right. And I'll show you a little bit how I work. I had a guy call me. This was Friday. Um, no, 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 no. This was not this Friday. Well, this was the Friday before last,
Mhm.
and he was calling me from Washington, D.C. area.
Okay.
It was a referral. One of his buddies who also invests in Detroit from the D.C. area, and he was trying to buy this property. This property was in Pennsylvania. It was actually he's in D.C., but it was in York, Pennsylvania,
Okay.
right? And
Yep.
the listing price was $499. I forget how many. It was a small. I want to say maybe 10, 12 units. It was a
Okay.
small multifamily.
Okay.
So he said, "Yeah, me and my realtor, we went ahead and offered 425." And so, I was hoping I could catch you this morning, but I couldn't wait. So we're putting an offer in at 425. And I'm like, okay, so what's the number? So we went over the NOI,
Mhm.
right? And I said, okay, the cap rate that they're selling this property at is was like 8.63%.
Okay.
Okay. But I asked him, did you double check the numbers? And he's like, well,
Yeah.
what do you mean? I said, well, in the offering memorandum, they said, here's our expenses, right? Here's our income, and then here's our net down here. But did you actually do your own math? Or did you just
Mhm.
assume that total was right? Because a lot of times it's not. And he's like, no, I didn't. So he did the math, and it was 10 grand off, right?
Okay.
Right. So, okay, well, 10 grand is 10 grand, So we
Yep.
did the math based on that cap rate. It's like, okay, well, that should drop the price down to 399. Then we found another error in the operating agreement where they didn't account for vacancy loss, which should
Mhm.
be 5%,
Yep.
right? And there was a one other thing which I can't remember, and
Property
that
management.
um no, it wasn't property management. That was actually in there. But anyway,
Mhm.
it dropped the NOI further.
Okay.
I want to say like 34,000, 31,000, somewhere in there. And so I said, now based on their cap rate that they initially was offering this property at, you should be offering 352.
Yeah.
He's like, holy crap. The other lenders I talked to just wanted me to throw in an application. And I'm like, you can throw in an application if you want to, at 425. I mean, you did, but I don't see how the value's there. And, just as from an investor perspective, I mean, it's your decision. But let's even look at cash flow. So I was going strictly from a sales approach.
Yeah.
Right. So when I said, okay, based on a 30-year amortization, because you can get a fully amortized 30-year loan on a multifamily.
Yeah.
Right. So I just did I calculated the debt service on that, and was like, oh man, you're barely making like $700 a month, because
On a
he had the
10
taxes
on a
and he had
10
the
unit.
insurance and he had all that other stuff. Yeah, so it's like $700 a month at 352.
Why buy a 10 unit then?
Right. So I said, now, is this property under market relative to rents?
Yeah.
And he was like, oh yeah, absolutely. And it had a the first floor of the building was retail. So it had 3 units of commercial.
Okay.
Right. One of them was at market rate. The other 2 was substantially under.
Okay.
Right. So he's like, well, once I get those up to full market, that would be like half my cash flow all by itself.
Yeah.
Which is actually not that uncommon when you have what we call mixed use.
Yep.
Right. And so I said, okay, what about the residential units? And he was like, oh yeah, they're under market too. Now, based on market rates, he gets that rent up. Okay, now the value's at $499.
But you're not going to pay a premium for what's going on now.
Exactly.
Now after you do all the work, now you're paying the price of after you do all the work.
And as some of your viewers may know, a lot of sellers will say, well, when you get done rehabbing this place or changing the rent rollover, or raising the rents, oh yeah, it'll be worth this. It'll be worth $2 million.
Yep.
Yeah, but I'm not paying you $2 million now.
Exactly.
It's not that, that's my equity.
Yep.
Right. If it's so wonderful, you do all that stuff. You put all that money and time and work effort in, and then you get it to $2 million. Because the question that I would think as an investor, I would think, well, if it's all of that, why didn't you just do it if it was so easy?
Exactly.
Right. Oh, you didn't want to do it. Okay, well, if you didn't do it, then that means I've got to, so therefore I deserve to get paid.
Yep.
Right. But the thing just didn't cash flow anything above that 352 number. And whether it's worth buying or not gets to after I get it cash flowing, after I turn over that rent roll, is there opportunity for growth? The answer was yes.
Yeah.
Okay, so as a lender, I have to underwrite it as it is. I can't underwrite it at $499.
No.
And it's 100. And this property, by the way, was 100% full.
Okay.
So this was not a property that was beat up, torn up.
Yeah.
It wasn't that kind of situation.
Well, it probably was just with tenants in it. So, old tenants.
Right. But physically, the property was in good shape. It didn't need any, it didn't need it. According to him, it didn't have a lot of deferred maintenance at all he could see. Right. So, but that's where we sort of did a deep dive. And then he's like, well, man, my realtor is going to be upset. Right. And I just sort of said to him, well, let me ask you a question. I was like, okay, you're looking at $399. Now we're looking at, $499. Now we're down to $352. As a lender, is it better for me at $499 or $352? He's like, well, I would think it'd be $499 because the loan amount is bigger. I was like, yeah, exactly. So I just cost myself money. I'm a terrible loan officer. Right. And then we just laughed. It joked about that. Right. But at the end of the day, me wasting his time, taking an application on a bad deal when I could have sat there and literally in 15 minutes, 10 minutes, do
Mhm.
the math and say, does this make sense?
Yes.
Right? Versus taking a loan application, he's spending the money on due diligence for a deal he shouldn't even be looking at for 5 seconds.
Yeah, and
Much
this
less
is
going through 2 months of due diligence.
yeah, and this is where I tell people build your team. Okay. Now, it does not mean building your team does not mean go hire 10 people or anything like that. No, build connections. Build
Hmm.
connections with your loan officers, with Malcolm, build connections with people, other wholesalers that are more experienced, other investors that are more experienced that can help you run the numbers and help you look to see what you're not seeing. We all have blinders because we see a deal. We need to open up our eyes, and building our team helps open up our eyes by, hey,
Absolutely.
can you run through this? Can you look at this again? Can you see how how we run the numbers? Are these numbers? Am I missing something?
Right.
Things
Right.
like that.
Right. Right.
So
Absolutely. Well, and here's
yeah,
the thing. I know that there might be some investors that are thinking, well, man, what I'm offering and how much I'm making and what my IRA is, that's my business. That's true.
yes,
However, underwriters on the lending side, we're doing that math. Sooner
yep,
or later in the process, we're doing that same math because from our perspective, if it's a bad deal, and I say a bad deal, let's say it's barely going to make money.
hmm,
Our perception is if he's paying us $2,000 a month and he's only making $400 a month, right? At some point, resentment's going to build in because the bank in his mind is making more money than he is as the investor.
and how likely is he to default?
And how likely, well, and maybe not, right. A, how likely to default, but even more common than that, Randy, is how likely is he or she to put the deferred maintenance
Hmm.
and make the improvements, you know what I'm saying?
Yep,
Do the repairs and the capital expenditures
yep,
that they need to keep the collateral up,
yeah,
because I don't want to, I never want to take back a property. I'm in the paper game.
yeah.
You guys are in the property game, right? I
Yep.
I do not want property. This is not a loan to own situation.
Hey, I want to
Right?
be in your game. I'll tell you
Right. That's not
that.
that's not my thing, right?
Yep.
So if I feel like, man, this is a bad deal, they're going to sour on the deal, and then they're not going to do the maintenance, and then the property, if we have to take it back, is going to be worth less,
Yes.
right? Well, okay, so now what do I got to do? Take this property back and then hire someone to go in there and rehab it and do the things
Hmm.
that it should have been done already. It's already going to be expensive.
Right.
So we want to see a healthy ROI for the investor because we know that deal is going to be viable long term. And if it's not, we're going to ask them, what's your plan,
Yep.
right? Because, man, this looks really thin, and they're going to say, oh, well, I plan on doing this, I'm going to change this, da, 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 da. Okay, great. If there is no plan, and
Hmm.
it's like, man, his ROI is barely equal to the interest rate on the loan. Yeah, we're
So
not gonna do it.
is that the reason why you ask for a scope of work on from a contractor when you do like a hard money loan or a construction loan, whether it be commercial or residential, doesn't matter.
Right, right. Well,
So,
that's a scenario where we're going to say, I plan on, putting in 50 grand,
hmm,
and this thing is going to go from, let's say, 500,000 to 650.
got
It's
it.
like, okay, so we're going to take that scope of work and that rehab budget, and we're going to give it to the appraiser, and we're going to say
Yeah.
to the appraiser, tell us the value as is.
Hmm.
Now tell us the value after implementing this scope of work,
Got it.
right? And sometimes the number's there, and sometimes it's not.
No, I 100% agree with you on that. The numbers don't lie. And that's one thing I learned. The numbers don't lie to what it is. They may try to lie for what the value could be. And that's what I noticed people seeing is,
Mhm.
oh yeah, my house is worth arbitrary use 500,000. Okay. Oh, it's worth 500,000. That's what Zillow says. But you need 70 grand worth of work in order to make it actually worth 500,000.
Right, right. Well,
And I'm
and
not going to
every once
put,
in a while you'll get into a situation where it'll be this is not typical, but it happens.
yeah.
Well, I'll get into a discussion with an investor where their number's too low,
Yeah.
right? So, example, I'm working on a warehouse deal in New York State,
Okay.
okay, and it's a huge building, almost
Okay.
400,000 square feet, okay,
Mm-hmm.
and they're buying this building for $2 million, okay, and actually they bought it for 2 million,
Mm-hmm.
and they're going to put some, they need another 2.5 to do some substantial repairs
Mm-hmm.
to the building, okay, and then when it's done, it's going to be worth 7,
Okay.
okay. So in their from their brain, okay.
Yep.
So I'm doing the math, and I'm like, this doesn't make sense. If I take if the average square footage price per square foot in Rochester, New York, is for industrial
Yeah. For
it's
industrial. Yep.
$7 and like 782 a square foot times 377,000 square feet, right?
Mm-hmm.
That's a huge freaking number,
Yeah.
right? Industrial tenants are triple net typically,
Okay.
okay? So all you have to cover as a landlord is the outside of the building,
Mm-hmm.
right? So the lights on the exterior of the building, make sure the roof is solid, the walls are good, and maybe security for the whole
Yeah.
property, right? The
Yep.
fencing, very little expenses.
Mm-hmm.
So I'm doing this math, and I'm like, man, this is like a $10-12 million building, depending on what you guys charge. Let's say we don't do $7. What if we did 5? Well, we go back through the math again, and I'm like, okay, I'm at 10 at $5. Am I missing something? And the guy's like, they can't be worse. I said, why is that? Because my expenses are going to be $500,000. How?
Yeah.
Help. This is a math thing. Let's go through it. Here's the taxes. Taxes are $50,000 a year.
Yep.
The utilities, which are light because
Yep.
the tenants are covering the utilities, right? Da, da, da. We go through all the categories. Do all these make sense? Yes. That's $233,000. We had 1.5 million in income. So where's the other 200?
Yeah.
$250,000, right? Would I miss something? Well, no, that's right. Okay. Well, now let's take that net 1.2 divided by
Yep.
right a conservative cap rate, right? Unless you use 10,
Mm-hmm.
that's $12 million. Oh, that can't be right. Well, and getting to your point, Randy, the math
Yes.
is the math,
Yes.
right? So so he was thinking I'm going to have some of these tenants, and I'll be a little loosey goosey with them, and I'm like, no. If you actually run this property professionally,
Mm-hmm.
there's a ton more value here than you think. And
Yes.
even we chopped the numbers down to like $4 a square foot,
Okay.
right? Which I told him doesn't make sense because you got 28 tenants, and look at your rent roll. This tenant's paying you $6 a square foot. This tenant's paying you $5 a square foot. This tenant's paying you $7 a square foot.
Mm-hmm.
Why would you charge someone $4?
Right.
You're already getting that from your existing tenants. And that doesn't make sense, right? And he's like, yeah, but that number just can't be. And I was like, dude, you got a better deal than you thought, but you can't run it like a multifamily.
So I got a
You have
question.
to run it like a warehouse.
Did he get it for 2 million?
Oh yeah, he
Holy
sure did. He sure did.
damn.
He got it on land contract,
Okay.
and my first reaction, and sometimes I'm way too blunt. I was like, wow, this seller was an idiot, right? He's like,
Yep.
oh, the guy's not stupid. The guy's not stupid. I'm like, oh, is he your friend? I'm sorry, I didn't mean to such your friend, but I'm just looking at, now there was a lot of space that he didn't lease, and the guy basically was trying to be an absentee landlord,
Yeah.
and half the tenants were month. I say half, 75% of the tenants
Or
were
month to
month to
month.
month,
Okay.
right? And I truly believe in my heart of hearts, the seller was not banking all of that money.
Yep.
You know what I'm saying?
Yep.
Because I got the distinct impression that some of these tenants were paying them like directly. You know what I
Yeah.
mean? And then the guy I was talking to said the word for me, money laundering. I'm like, because if there's
Yeah.
I'm looking at the leases, and if they're
Yep.
paying this much, but he's only showing this much on his bank statements,
Mm-hmm.
because the bank statements did not match the rent roll.
Got it.
So one or the two are wrong. And he's
Yep.
like, oh no, they're paying it. And I'm like, okay, he's just not counting it. He's like, yeah, he's not. I'm like, okay.
Yeah. So he screwed himself, honestly.
Yes, he did.
Yeah.
Yes, he did. And honestly, my client was a little tempted to take some of that same type of, um, um, freedom with the
Mm-hmm.
numbers that the other guy was taking. And I was like, you're going to screw yourself.
Yeah.
If you account for everything and you do it the right way, there's going to be 5 million more in value in this property than you expect, that you will then be able to tap
Yeah.
on a tax-free basis when we do the cash out refi later.
And that right there, I'm going to tell you, people are tempted to do that. Be like, because I don't want the government to get it. I don't want the government to touch it or anything like that. The government doesn't touch debt,
That's right.
period. So if your plan is to cash out refi, do everything the right way, account for everything so that when you can get that cash out refi, that all of that money is yours to put into other businesses, other adventures, whatever it may be. Okay.
Yes, absolutely.
Because the government's
Absolutely.
not going to touch your debt.
That's right. That's right.
Okay. People don't get it. The only people that do get it are the people that have listened to, read the books of Robert Kiyosaki. I'm going to tell you that right now. Or other people who said that, but like people like Dave Ramsey fans, they don't understand that. So now you still have to have debt properly because you will need to make sure that you're cash flowing. Okay.
Right.
So
And let me be clear. My firm, Castle Commercial Capital, we set it up 16 years ago,
okay.
February 9th, 2007. Right before everything went to hell in a handbasket.
Yeah,
Great
that's
timing.
that's the best timing right there.
Best timing. And I was doing, in 2006, I was doing residential mortgages out of Livonia for this company that was hiring like waiters, and they like literally would recruit waiters and bus boys
Mm,
and say, hey, you want to make 10 grand next month, you know?
yeah.
And then the guys like, yeah. And one of the owner of the company would take a couple other guys that used to be bus boys, and they're like, yeah, I was over at Olive Garden, and yeah, I did 8 grand last month. The guy's like, really? And then they would just basically put them in front of a dialer, and they would
Yep.
dial people all around the country and say, hey, I can refi your place and save you $200 a month, And folks would go, okay. And then they would FedEx them a whole loan packet. This was
Wow.
obviously before you had, excuse me, electronic signatures and
Yeah.
all that other stuff. And this guy was doing huge mortgage business out of the shop, but I would not sell a bad deal, because once I got out of real estate, I went into financial services, financial planning, right? So I was Series 7, Series 63, that kind of stuff. So I came out of the formal training of you have a fiduciary responsibility to do the right thing for your client.
Yep.
Right. So I had a prison guard in Detroit that I got a mortgage for like $85,000.
Okay.
FHA fixed rate. And my manager was like, "What the hell are you doing, Malcolm? What are you talking about? You could have got this guy $300,000 mortgage." I'm like, "Yeah, but that would have been an option arm, which are garbage. And this guy's a prison guard on a fixed income. He's not married. He's not going to be an entrepreneur. There's no, he's not on a track where he's going to make more money. And if that mortgage moves, he's screwed. Yeah, but you could have made $5-6 grand, and you're making like $600. Yeah, but aren't we supposed to do the right thing for our client? Oh, there you go.
Bankers don't think about
doing
that.
Right thing stuff again. You don't want to make money, fine. And I was talking with my pastor that Sunday after, and he was a real estate investor. He had a bunch of rental houses. And I was like, why should me wanting to do the right thing be a badge of dishonor? Why? I'm obviously putting my pocketbook above, or putting the client's interest above my pocketbook. But in the big scheme of things, I'll be okay and I can sleep at night. And he was like, well, if you're going to do a mortgage company, Malcolm, how'd you do it? And I said, well, first thing I do commercial, because commercial is it's not about the kitchen and how big the yard is. It's about the math.
Yep.
And he's, well, how'd you set that up? Well, you got to open an office, got to get some, basic, fax machines, some laptops, blah, 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 blah. And I says, and then, you're going to have to set up some alliances and some relationships with some lenders and, blah, blah, blah. And I was like, I just talked top of my head after about 20 minutes. I'm like, yeah, that's about how we do it. He's like, okay, let's do it. I was like, what? I thought you're asking me hypothetical.
Right.
Like I wasn't actually thinking about doing it because we should do it. Because, you like, I trust you like a brother, I know real estate, finance, we could be a great team.
Yep.
And I was like, oh, okay, well, we should talk to our wives. He's like, I gotta talk to my wife. I make all the business decisions. you gotta talk to your wife, right? And I was like, okay, well, I gotta talk to my wife, and I was like, yeah, but here's the thing, bro. I love you. I love you, but you don't know anything about mortgages. And so we're going to be a little unevenly yoked, right? In this, in the relationship, because I'm going to do everything. I'm going to train you on everything, and he's like, and then we're splitting everything 50-50. And he's like, yeah, that's true. And I was like, and I don't want to mess up our relationship, And so he's like, well, you know what? Here's the thing. You set it up. You tell me what we need to do, how we're going to do it. Obviously, you're going to have to train me on stuff I don't know, blah, blah, blah. I'll fund it. And then you put all the sweat equity into the thing. And I was like, okay. Oh.
So now that becomes worth it.
Oh, okay. Well, all right. Because I'm not feeling like I'm being taken advantage of.
Yeah.
Right? What I'm saying? I'm doing all the work and I'm getting half the money. Right?
Yep.
So I was like, yeah, okay. And we did that. And then, 16 years later, we're still cooking. Now, in 2019, we crossed over from being a commercial mortgage broker to being a lender.
Okay.
And that happened with a quick phone call. A $1 billion mortgage fund called me and said, hey, do you have any paper that you want to sell? Right? So in other words, I've got mortgages, people are making payments, and they'll buy that income stream.
So before you go further, like explain when somebody says paper, what does that mean? I know what
The,
that means,
the
but maybe the
mortgage
viewers
note.
don't. The note.
The
Okay.
mortgage note. So if there are 200, let's say there's 200 months of payments left,
Yep.
right? At $1,000 a month,
Mm-hmm.
right? It's a time value of money calculation, right?
Yeah.
So what is that? What's the net present value of that income stream, right?
And
And also you look at the
yeah.
debt and the
Yep.
value of the asset. There's a couple other factors, and then also present interest rates,
Mm-hmm.
right? So if I've got a note at 7% and current rates are at 6,
Mm-hmm.
that paper is worth more,
Yeah.
right? Because of the higher rate
Mm-hmm.
on it. Relative. So all those things, it gets when you talk about selling and buying paper, it gets really complicated. Those are the brilliant. The bond investors on Wall Street are the really
Mm-hmm.
smart guys at the table
Okay.
versus guys that are just buying the companies. It gets
Yeah.
way more complicated when you're looking at that side of it. But so anyway, I told the guys, listen, I don't have any paper. He's like, what do you mean? He goes, we're just a broker. He goes, yeah, but when I search commercial loans in Michigan, you're on the first page of Google. You're doing something right. And I'm like, yeah, our SEO game is pretty good.
Yeah.
There's no doubt about that. But no, I'm just a broker. He's like, well, I'm not a lender. And he was like, oh, okay. Well, you want to be one? And I was like, well, what do you mean? And he's like, well,
Okay.
if you're doing, good business, we'll buy your paper.
Okay.
So if you sell the paper yourself, and then we'll come behind it and buy it, and then that, which is how everyone works, right? I mean, banks,
Yeah.
banks just use Ginnie Mae, Fannie Mae, Freddie Mac. They do a
Mm-hmm.
mortgage, they go to Fannie Mae, right? That's why for like rental investors,
Mm-hmm.
they can't get past 10 loans,
Okay.
right?
Yep.
Because the bank says I gotta cut you off because Fannie Mae won't buy that 11th note, right? They say the person can carry no more than 10 mortgages at any moment in time.
They give you a hard time about number 5 too. So
But yeah, yeah. Oh, so they're like, okay, well, and so
yeah.
if the bank can't sell that paper and there's no opportunity to create liquidity, even just in case they need it later,
Mm-hmm.
they're like, nah, we're not doing it. So, now in our sector, there's private money, which is
Okay.
huge. The
Yeah.
private money market is huge because everyone's getting to the real estate game. You got pension funds, you got life insurance companies, you got hedge funds, you've got crowdfunding. You have all these private money funds that are now investing in commercial paper. And I say commercial paper being mortgages that are not on residential home loans.
Mm-hmm.
Okay, so there was a thing in the paper, and some of you guys may have seen it, where like Blackstone was getting into the rental market,
Yeah.
where they were buying rental property, because they're like you guys. They're looking at, I'm getting $1,000 in rent
Mm-hmm.
for a house that only costs this much money. That's way better return than a bond, and I got security in that investment,
Yeah.
right? So now these guys are playing in that pond, So
Yeah.
we went through the vetting process and with those guys, and after a few months, or I'll say few, probably about 2 months,
Yeah.
we became a lender. So now I have three
Mm-hmm.
mortgage funds that fuel all my paper internally.
That's awesome. Now,
Okay.
real quick, anybody out there who has any questions for this man, for myself, anything like that, put them in the comments, please. We will answer them here. You know, Sonny Harvin, we see you here. I know you're using your daughter's account here, so great. At least you're joining us now. Michael Ostrander, great dude. It was great meeting you the other day. Great to have you here. Anybody who's here, put a comment in there. Put a comment in the chat. Ask your questions. Let us know while we're talking. We'll answer them as we go. But let's interact. This is a two-way street, everybody. All right. If for some reason you're watching us replay, still leave a comment. I will answer them right away as much as possible. So just to let you know. Now, so we'll get back on track here. Now, as far also anybody who doesn't understand what paper is, leave a comment. We can explain it a little bit further into detail if you don't. Any questions you have, please let us know. So back to what you were saying. Happy to kind of work from there and see where we're
we
going.
do. We are still a broker, so because no lender funds everything, right?
Yep.
So there's deals that we don't do. I mean, we don't do every circumstance, right? So on situations where someone brings me a deal that is a fundable deal, but it's just not fundable with my internal paper, that's when I'll go outside and I'll take my lender hat off and I put my broker hat on. And then there's other capital sources that we work with that we close business with, on every half. And we still write herd of it. Because typically when you go to the bank and the bank says no, you're out.
Exactly.
Because and this is something some people don't know. And matter of fact, I'm writing a book right now on funding the unbankable deal.
Okay.
And there's a section, a chapter in there about how the inside baseball of how banks work, right? Which is every loan officer at the bank also has a deposit quota. They have to do so many loans per quarter, but they also have to bring in so much money in deposits. Because that's the flow. Everything happens when a bank brings in money. And so if someone does a loan at Chase for, let's say, $1 million apartment building, hypothetically, Chase also wants to do all the banking on all those rents through Chase.
Yep.
As a condition of the loan. Now, if that person is banking at PNC Bank and PNC Bank wouldn't do the deal, but Chase would, then they're going to leave PNC Bank.
Yep.
There's no universe where Chase is going to let that cash flow go through someone else, and they did the loan. That's not going to happen. That being the case, when PNC turns you down, they don't say, "Oh, well, Chase is lending on multifamily right now."
Right.
They don't do it. They just say, "Well, we're sorry we couldn't help you." The next deal.
Right.
Well, I tell a story in my book of I met with a bank VP about referring business to us because we typically don't deal with banks on a lot of our financing.
Yep.
And our non-bank lenders don't have deposit minimums, so we don't care where they like. When I do a loan myself, I don't care where they bank.
Okay.
So it's safe for the bank to send me a customer that they turn down. I do the loan and they stay at that bank.
Yeah.
Right. So I'm doing lunch with this guy. We're walking out of this restaurant in Birmingham. We're headed back to their bank branch in Bloomfield. The guy says, "Oh, by the way, the fact that we're not doing inland or multifamily right now, don't mention that. That's confidential. We talked about we're going to share some confidential stuff. Yeah. So and by the way, that's also confidential with the loan officer. So don't tell him either." So I'm like, wait a minute, your old guy don't know?
Right.
Wow,
that's messed up.
That's messed up. But that's why if you guys go on LinkedIn and you look at the profile of the typical banker or commercial loan officer at the bank, most of them have a tenure no more than 3 years at any one institution. And then they're jumping ship to someone else, for various reasons, but a lot of it because, they play games with their bonus.
Yeah.
They're trying to do loans. They're trying to bring in deposits. And they're like, okay, I'm stuck at like 50 grand and I can't, I should do better than that.
So we got a question from Terry Penny, which awesome person, by the way. hopefully I'll have her next on my podcast. But she said, "Hey, what's the typical minimum loan amount for a commercial loan?"
That varies depending on the type of property,
Okay.
right? So multifamily is different from retail, which is different from industrial. Different locations will also have minimums.
Okay.
So sometimes, like one of our funds, they're very, very robust in their lending.
Okay.
But if they're dealing with a property in Detroit
I was just about to ask that.
specifically,
Yep.
they won't do anything under $500,000.
Okay.
You know, if they're doing if I'm doing like for example, fix and flips, you know,
Yep.
we're doing SFR fix and flips. There's some folks that are like, yeah, we'll go down to 75,000 or 50,000.
Mm-hmm.
But in these certain markets, and they'll say Miami, San Diego, Detroit, Boston,
Mm-hmm.
they'll name them. In any of these markets, minimum is 100,000.
Right.
So location will come in will come into play. Most of our commercial stuff, especially if we're doing bridge loans,
Mm-hmm.
we can go down to 200,000.
Okay.
Okay, if we're not doing a bridge loan and we're doing straight long-term financing,
Mm-hmm.
then a lot of our programs, the minimum starts at 500,000.
Got it. So Ron Harrell, and I know I butchered that last name. Sorry about that. The reason it says Facebook on the screen is because it's from the Facebook group. If you haven't been from the if you haven't, if you're not on the Facebook group, it's Metro Detroit Off Market Real Estate Group on Facebook. Come join. But if you want a better viewing experience, view us on YouTube. All right. I'm trying to build that channel as much as possible. Like, subscribe on YouTube. Please do. Now, he does ask, what is the typical credit score needed to be approved for a fix and flip loan for either a single or multifamily loan? I'm assuming you only do for multifamily, or do you do for single family for fix and flip as well?
Yeah, we do.
You do?
We
Oh,
do.
okay.
Yeah,
What's
we
the
do. We
typical
do.
credit
We
score
do.
needed?
Typically, well, multifamily is going to be like 680.
Okay.
Okay, minimum.
Okay.
Minimum. We like 700 and above.
Got
And
it.
and when I say we, right, this is most lenders.
Yep.
You know, most of us are going to be competitive.
Yep.
Okay, so the exception to the rule is if you're doing a bridge loan.
Okay.
Because bridge loans are way more, they're short-term commercial loans that are for properties that do not qualify for traditional long-term financing because there's some type of what we call hair on the deal
Okay.
that makes it unattractive or makes it undoable from a long-term
Got it.
perspective.
Yep.
Okay, they have looser guidelines by definition,
Mm-hmm.
so they may be able to go a little bit lower. They may go 660.
Okay.
You know, but you go below 660, it is tough.
Yeah.
It's tough. On single family fix and flips and that kind of stuff, same thing. 680,
Mm-hmm.
maybe 660 right now because rates have gone up so much
Yeah.
over the last 12 months. A lot of lenders, us included, we've hedged our risk by
Mm-hmm.
increasing our FICO scores.
Oh, okay.
So where some programs that used to be 640, they're now at 660. The
Okay.
ones that are 660, they're now at 680. The ones at 680 are now at 700.
Now, how much of that is related into the deal, the credit score versus the actual deal? You know, obviously the deal matters a lot,
Credit score is just
you
check
know.
your box. It's a check your box
It
type of thing.
okay.
Yeah,
Okay. But
yeah.
you're mainly your core values are mainly looking at the deal, but you still have to check that box for the credit score.
You still got to just check that box for the credit score.
Got
Yep,
it.
yep. You can have LOE, letter of explanations,
Yep.
for certain things, but they still want to see
Yeah.
and understand everybody's getting more conservative.
Yep.
Everyone's getting more conservative.
I
Because what
have to get
lenders
more.
are
I
scared
have to get
of,
more conservative on my numbers when
right?
I wholesale a deal, and unfortunately, that's the reason why I haven't had a lot of deals come through lately. Is because the numbers have to be conservative, and when you got other wholesalers just spewing out crap, and then they don't sell it because of that, then they're breaking them down, and then now that buyer or that seller is just sick and tired of it, you know.
Yeah, it's all
So,
fun and giggles until you don't make money,
yep.
right? You know, and so the game of underwriting is like a game of musical chairs. You
Hmm.
know, when the music stops, you still have a place to sit. And
Hmm.
no one wants to be that person that, okay, between credit and the value of the property not being what it should, the
Yeah.
income is not as strong as it is, the rent roll was weak, the operating statement was full of holes when it
Hmm.
came to the expenses. Okay, I'm not. I'm out.
Right.
I'm out.
So this is not Lila. This is Sonny Harvin. Okay, he's using his daughter's account.
Mhm.
He says, "Do all fix and flip loans work using a draw method? My partners and I can't see why that's helpful if we have to have the money up front for a minimum materials or something like that." I'll let you answer that. I have a reasoning for that, but I'll
Mhm.
let you take that one.
Well, I mean, lending is all about risk,
Hmm.
right? So if I'm doing a deal where, let's say the purchase, and I'll use like a SFR fix and flip,
Hmm.
right? So let's say, Sonny, you got a deal, you're buying it for 100, your rehab budget is 50,000, and your ARV, your after repaired value, is going to be, say, 240.
Hmm.
Okay, hypothetically. Um, we'll go up to 85% of the purchase price,
Right.
right? So we'll end up to 85,000. Okay. Now
Hmm.
this is where, if there's a hiccup, and let's say that person's at, let's say, 760.
Hmm.
Okay. Well, say Sonny comes in that week, we pull his credit, and now he's at 720.
Hmm.
Okay, well, that may drop us down to 80% of the purchase price,
Right. Okay.
right? He gets down to 680 as his mid score. That may take that down to 75% of the purchase price.
Mm.
So
Okay.
the more perceived risk, right,
Hmm.
the less we're lending. But let's stick with the draw question for a second. We're always going to fund 100% of the rehab budget.
Hmm.
You know, now that's going to be on a draw basis. Everyone does reimbursement.
Hmm.
Um, I know very few people that'll do it up front, because the problem from a lending perspective is, I give the guy the 50 grand, he doesn't do the work. So now he
Yep.
owes me the 80,000. Let's say I did 80% loan to value for simple math. I
Hmm.
gave him 80,000 for the purchase, and I gave him another 50 for the construction. Now he's ending me for 130, but the work never got done. That means
Yes.
it's $100,000 property.
Yep.
I'm screwed,
Yeah.
right? So lenders are like, no, you give us a draw schedule, you give us, your scope of work, and then you say you're going to do, hypothetically, of that 50,000, let's say 10,000 was the kitchen. You call and say, hey, Malcolm, I'm ready for our draw. We send someone out. They look at the kitchen. They said he was going to put in granite countertops and, glass
Hmm.
backsplash, new cabinets, blah, blah, blah. And we'll say, yep, that's about $10,000 worth of work. We release the 10,000. Now the inspector goes in and says, actually, he did about 50% of the kitchen. It's not quite finished yet. What was his budget? 10 grand. Okay, so we're going to release $5,000.
Mm.
And then that money's wired within a couple of days right to the investor's bank account.
Got
You
it.
know, so You control as an investor, though, you have full control of that draw.
Yep.
In the respect of, am I going to do, and just again going back to $50,000 number, am I going to do 5 draws at 10 apiece?
Mm-hmm.
Am I going to do 1 draw at 50 at the very end? Am I going to do 2 at
Mm-hmm.
25? You decide when you're ready. So you just need enough money to fund that first draw.
Got it. So essentially, that's exactly what I was going to say as far as it's about risk. And it's not even about the risk of the investor. It's actually the risk with the contractor too. Because contractors could take your money and run.
Right.
They could take your money and just never show up the next day. And what's going to happen? You know,
Right.
Now we're not sitting here saying that you're going to be stupid enough to pay them all up front, but some people have. And whatever money you're out of by paying them up front, now you're just down that much money. How are you going to pay that up? You know?
Right. Right.
So
well, you manage your risk the same way we do.
Exactly.
Right.
So
you manage your risk.
You should never, I'm going to tell you this. You should always talk to a contractor and pay for the materials yourself. Okay. And you pay for the materials yourself and you pay them up for labor. That's how you should have it. Right. If you don't do it that way, the contractor is going to double dip on you by charging you labor, and he's going to upcharge you on the materials, at least 20%.
Right.
Okay. So always have it written that way. If you can, you got to keep on them about doing the work as far as getting the material, because you don't want them waiting on you.
Well, and that gets to something you said earlier, Randy, about having a good team.
Yes.
Right. You're going to have good contractors that you know and trust. You got a good relationship with. You know, if you don't, then the next best thing is to get referrals from people that have already done stuff. You know, just like the guy that had the multifamily in York, right? He was a referral because he didn't have a lender, right? From another investor buddy that did 3 deals with me, right? And so that guy was like, "Oh, you need to get to my guy Malcolm. You know, this guy's awesome. Blah 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 blah." You know, and so and because he had a good experience, he felt confident, and so that specific client in that situation, his realtor recommended another lender to him, but he didn't want to use the guy because it wasn't really a referral. It was just, here's a bank I think can do it.
Yeah.
Right. Versus his buddy said, I closed 3 deals with this guy and they've been great. And he's like, okay, I can trust that.
Yeah.
Right.
Because not only that, but now he's not going in with a wall up with you. He's already broken down that.
He's got a reasonable
layer.
Expectation because his buddy told him this is what it's like working with Malcolm. Just like if I was a plumber.
Yes.
Right. And I'm using me as an example, but this would apply to a plumber, a guy that's going to do your drywall, someone that's doing your electrical. Okay. Did they work out when they worked for you? Did they do what they said they're going to do? Did they meet the time frames? They come in on budget? You know, all those things are going to be important. I want to say one thing too about construction or rehab work. When you get to larger projects, larger multifamily rehabs and things like that, you know, the lender is going to come behind and ask for a feasibility study. Okay. And what a feasibility study is, you tell me I'm putting in $200,000, and let's say you're doing 10 units, and you're going to rehab 20,000 a unit. Okay. The feasibility study is going to look at your scope of work and say, based on the improvements you're making, is it reasonable it's going to cost $200,000? And is it feasible? They're going to put in, again, you know, granite and bamboo and blah, 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 blah. And they're going to do that for $3,000.
Yeah.
Mm, and that can be, so you don't really have that when you're doing most like SFR
Mm-hmm.
rehabs, but when you get to commercial, industrial, and multifamily,
Yeah.
you will have feasibility reports. They're going to double check your numbers, and it won't
So
be a lending guy doing it. It's going to be a construction guy
right.
looking at that.
So that brings me up to this next question that Michael brought up. What would be the minimum DCR on a multifamily deal?
DCR is debt service coverage
Mhm.
ratio,
Yep.
right? So that's the gap between the payment and the net operating income.
Yep.
Okay, so using again, let's say I had a multifamily, and after expenses, after taxes, insurance, maintenance, property
Mm-hmm.
management, blah blah blah, I'm netting $8,000 a month.
Mm-hmm.
Okay, and my debt service is $4,000 a month. Okay,
Yep.
so that ratio is actually 2.0,
Okay.
right? And
Yep.
so if I was doing, let's say, and I use a house for example, if my payment was $1,000 and my net operating income was $1,200, now I'm at a 1.2.
Okay.
Okay, 1.2 is going to be typically your minimum
Okay.
for most underwriting guidelines with most lenders. You will
Okay.
have risk factors that can move that number though.
Okay.
Okay, so if a guy's at, let's say he's got low experience,
Yeah.
so we're really, in the six C's, we're testing his capabilities low.
Mm-hmm.
Then we may say we need to see a 1.25
Okay.
on that deal, or the location is a little hanky, not hanky enough
Mm-hmm.
we won't do it, but hanky enough to make us a little nervous. But we're going to make sure it's got a 1.3 on the debt service,
Got it.
right? But
Okay.
all things being equal,
Yep.
1.2 should be reasonable. If you're doing commercial, retail, industrial, office,
Mm-hmm.
that kind of thing, you're going to be looking at a 1.3,
Okay. As a
you know,
minimum.
at a minimum, some with wind gusts up to a 1.35.
Okay. So now I have a question as far as, do you ever get leads on people trying to sell their property? Say they're they're trying to do a cash out refi, or they're trying to see how they can, and they decide, you know what, I think I want to sell instead of go through all that process. Do you ever get people like that?
Typically, no.
Okay.
Typically, no. I mean, if the investor really, if they're coming out for a cash refi, they want to keep their property,
Right.
right? So, and if the cash refi, what typically happens if the cash refi doesn't work out, instead
Mm-hmm.
of saying sell, they'll just say, well, I'll just hold on to it a little while longer,
Yeah.
and let the natural progression of the rents go up over
Mm-hmm.
time to where they got enough of a spread, because the bigger the net operating income, the bigger the value,
Got it.
right?
So another reason why I was asking about this is like, how can we be of service to you, or how can we be of service to, you could be a service to Moa. I'm just
Well,
kidding.
I tell
So
you, like, if someone where people can be a service to me, I
yes,
mean, I I make money off the river, not the reservoir,
got
right?
it. Yep.
It's the flow,
Yep.
right? So the off the flow of deals, I'm one of those people who like appraisers, right? Like real
Yep.
estate agents, right? Lenders. I'm making money off the flow of deals. The better the flow is, the more
Yep.
my investors are buying and doing more stuff, the better it is for me,
Mm-hmm.
right? So if I can help my investors do more deals, it makes me more money.
Right.
I'm not trying to make a killing off of one person.
Yeah.
I mean, my ideal situation as a business model is for me to have 100 investors
Mm-hmm.
that are doing 10 or more deals a year.
Mm-hmm.
rather than 1,000 investors doing one.
Mm-hmm.
You know,
Yeah.
now as a consequence of that, when guys like you find a deal,
Mm-hmm.
and let's say, you know what, you don't want to buy it for whatever reason.
Yep.
You know, it's not, you know, it's a nice deal, but it's not close enough to me physically,
Right.
right? Because you know, most people want a deal that's within a half hour
Mm-hmm.
to an hour drive of, you know, where they're at, right? Or they, you know, maybe they don't like the numbers per se for their own parameters. You know, they
Yeah.
want to they want to knock it out. They want to get a home run. They want to make 35% on every deal.
Mm-hmm.
This deal is only doing 20%. That's too small for them. Okay, well, call me with the deal.
Okay.
Send me the deal.
Mm-hmm.
Okay. Now, I'm a, I am a lender. I am not
Yes.
trying to get in your game of making money on the sale of real estate. I'm
Yep.
never going to ask someone to say, hey, can you, you know, give me a little something on the side,
Mm-hmm.
you know, da, da. No, 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 no. You do what you do on the real estate side. I'll do what I do on the lending side. Right. I don't count someone else's money. I'm not
Yep.
trying to pick their pocket. But I'm more than happy to help someone move that real estate if I have another investor, and I do have investors that are looking to buy stuff.
Mm-hmm.
And if they say, and if I call them, and then this separates me from 99% of the lenders they're dealing with, all my investors, I know what their criteria is. And every
Okay.
time I run across a deal that fits when I'm calling the phone,
Mm-hmm.
and I'm like, hey, Randy, I got this deal. It's a 12 unit. It's on such and such. You know, the cash flow looks good. We'll finance it because obviously I'm not going to talk about a deal I can't finance,
Right.
right? Here's what the down payment's going to look like. Here's what the cash flow is going to look like when you're done. Here's what the ARV is going to be. What you think?
Got it.
And so if you got a deal out there and it doesn't work for you, you're not interested in buying it. Maybe it's a shopping center and you want to do multifamily. Maybe it's a warehouse. You know, you want
Mm-hmm.
to do automotive. You know, yeah, if it's a good deal, please send it to me. Then I can funnel it to one of my investors and help them make money. You know,
Okay. Yeah, most definitely. And that's where I also, how I think investors can use you as well
mm-hmm.
is a second pair of eyes, looking through the deal, making sure the numbers work. You know, you're also somebody who's not going to go behind somebody's back to try to steal a deal. You know what I mean?
Yeah,
I mean,
yeah.
it's just whether it works or not, you know, it just kind of goes from there. So, and that's
I,
back to
I
what I said, building a
I'm an
team.
I'm an investor, but
Yeah,
I don't play in the same market that
right,
most of my investors do. You know,
right, right.
I do single tenant net lease properties.
Mm,
So me and my investor buddies, when we have our Sunday night conference calls, where
mm-hmm,
we lay out what's our plan for the week.
mm-hmm.
We're like, hey, go check out this property on Gross Spec. Go look at this property on 8 Mile. Go look at, you know, we're looking
Yep,
at single tenant, and 99.999% of my clients are not investing in that
yeah.
in that blue ocean.
So explain what that means. Single tenant. Um,
It would be like if, example, um, we had a deal was a Subway,
okay,
right, and Subway was leaving, so the
okay,
building was empty.
got it.
Okay, when commercial property is empty and it's not cash flowing, it's worth less,
Yep.
right? So we buy it at that lower amount,
Mm-hmm.
and then we get Tropical Smoothie in there. And
Got it.
Tropical Smoothie signs a 10-year triple net lease, corporate guarantee, meaning if they move out, they still got to pay us the remainder of the lease term,
Yeah.
those payments, and they're paying, let's say, 400,000 a year, right? So you do the math, 400,000 divided by, you
Yeah.
know, 6.5% cap rate equals blah. You know, we're buying it at this price. Okay, it makes sense.
Yeah.
You know,
Now, do you ever work with a tenant about helping out with the construction or anything like that? Because I know in commercial, it's all on the tenant to do the construction to match what they want. You
yeah,
know,
no,
like
not my wheelhouse.
got it. All right.
Yep.
So you just kind of tell them, hey, we take care of the outside, you take care of the inside or whatever signage needs to be
Well,
done.
and the
You
tenants
know,
that we deal with on that kind of thing, like Walgreens or Foot Locker
yep,
or Tropical Smoothies, you know, they have who they want to use. If it's a Starbucks, they
yep.
already have relationships with who they're going to use on the
They have their
construction
cookie
side.
cutter people that knows
Yeah,
exactly their
that's
systems and
exactly
what they
right.
want
And
to do.
corporate has specific guidelines for how that store has to look.
Now, I don't want to jump off too far,
Right.
but I do want to ask this: how did you develop those relationships to get those people to you? Did you put up an ad on Craigslist? Did you to
I mean,
find those type of
as
uh,
far as which relationship specifically?
to get like say the Subway or the tropical smoothie into your building? I mean, are they just calling you up because you have a vacant property? Are you listing it on
Oh
something
no,
called like an MLS for
no, I use
commercial?
YouTube. I use YouTube.
What?
So yeah, I use YouTube. So when we market, and I don't know if this would be applicable to you guys, right?
Hey,
But like my quote unquote competition, they don't do this stuff.
right.
But this is a little free stuff. But my people gonna kill me. Um, we do a YouTube video, but it's
Okay.
private. It's not public. So
Ah,
you can do a private video
yeah.
where someone
Yep.
has to have the
Yep.
exact number.
The
You know
exact
what I'm
link,
talking about?
everything. Yep.
Backslash 18753, that kind of thing. We'll do
Yep.
a private video on YouTube, and then I
Okay.
send it to the prospective tenant.
Mm.
So there's a video of me. You can't find it, but it's on YouTube that says, "Hey, I'm Malcolm Turner with blah blah investment group. This
Mm-hmm.
is our Walgreens behind us. This is the corner. You got this business over here. You got this business," because corporate tenants want to know what other corporate tenants are around that space.
Yep.
It's a whole different type of thing.
Yeah.
So we explain the traffic count in the area.
Mm-hmm.
We show them. We swing the camera around. I show them the other, corporate tenants that they like to be near, that are
Mm-hmm.
near them,
Yep.
right? And then I show them the outside of the building and the parking lot. Hey, it's 13,000 square feet. It's this. Let's go take a look on the inside.
Mm.
And now all of a sudden the video cuts, and I'm on the inside of the building. Hey, it's an empty shell. It's move-in ready. Blah blah blah. It's really only like a 3-minute video, tops,
Okay.
tops. You know,
Yeah. Corporate people's time is it's worth,
well,
a
it's not a
lot.
lot to talk
So,
about, but what it does is gives them a sense of, they can hear the traffic. They can see
yeah.
the traffic count going by, and they're like, oh, okay. And then we go on the inside, we just show them the shell. Yep, this is it,
Mm-hmm.
blah, blah, blah. Call me. And then what I do is I send out that email to the prospective tenant with a link to that private video.
Mm-hmm.
So I'll say, hey, I've got this property. I think you might be interested, because every one of those businesses, take for example, like Savoy Sliders or Tropical Smoothie or Starbucks, they've got guidelines on what the real estate needs to look like for them to participate.
Right.
Okay. I know what those guidelines are. So I only send them the stuff that fits their guidelines,
Mm-hmm.
you know, and then if they're interested, they call, and then we set up a site visit and sign the lease. And in our business, when they sign that lease,
Mm-hmm.
as soon as that lease is inked, the value of that property goes up immediately.
Okay.
You know,
Because you got guaranteed income coming in.
for 10 years or 15 years or whatever it is.
Okay.
You know,
I need to get in the
so
commercial game.
but that's a different. But the fundamentals are still the same:
Yeah.
location, location, location,
Mm-hmm.
right? Income, 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 right? Buying here, doing some type of value add.
Yep.
In our situation, the value add is getting the right tenant in there, you
Mm-hmm.
know, to get it here,
Yep.
and then you either flip it, you might buy a property at 400,000, and then now you sign that corporate tenant. Now it's worth 800,000.
Okay.
And then you sell it. There's a Foot Locker on Greenfield and 8 Mile in Oak Park,
Mm-hmm.
across from the old Northland Mall.
Yep.
Right, it's like a kids Foot Locker, a regular Foot Locker, and then there's another like lady Foot Locker, I think. And it
Okay.
looks like it's 3 stores, like a little mini strip mall.
Yep.
But in actuality, it's one building. The
Okay.
developer went in, built that thing from ground up, signed the deal with Foot Locker, and immediately put that thing on the market at 6.25%, 6.5% cap rate.
Mm-hmm.
Which was, my estimate was about $1.5 million, $2 million more than what they spent.
Okay.
You know,
That's awesome. Yeah, I'm in the wrong business. I need to get into that commercial game. So,
you
but
know,
hey, it is what it is. You got to work your way up. And that's kind of how you
but I
do
don't I
things.
don't
So
compete with my clients,
that's
right? So I'm
good.
not I'm
Yeah.
not buying SFR fix and flips. I'm not buying multifamily, you
Yeah.
know, because I don't want there to be a conflict of interest. I don't want someone to think about, well, man, this is a really good deal. It's off market. Can I share this with my lender?
Yeah.
Because I will always make more money as an investor than I will as a lender.
Mm-hmm.
You know,
Oh,
so
100%.
and there's loan to own shops out there, that their whole purpose is to do quote unquote bad deals that they
Mm-hmm.
hope intentionally go under.
Got it.
Because if I do a loan at 60% of value and the guy's got terrible credit, and the property, he has to work his exit plan perfectly, and
Mm-hmm.
it doesn't work, now I got this property with 40% equity in it,
Right.
where we don't play that game.
No, and that's one thing I like about you, even from the first time I met you. And I met you at a multifamily meetup, by the way. So if you're not going to meetups, you need to go to these meetups.
Absolutely.
You meet guys like this, and go from there. But you're super open, super honest, and that's one thing that I really liked about you, because that's what I do. Even in my wholesaling business,
Mm,
I still try to be as transparent as possible with even the sellers.
right.
Okay. I was actually on an appointment today, and I told him, I may not be your buyer. This is what I do. This is what I do. It looks like you want more retail. You may have to go with uh, a realtor. I can recommend one for you. And they immediately shrugged. I don't want to deal with a realtor. And I'm like, great. Oh, I still may get it appraised and go, great. I'll follow up with you. We'll go from there. I was like, but my number is this amount. It was way under what they were looking for.
Right.
And I'm like, hey, this is the reason why. This is what I think I can sell it for after it's fixed up, because of the interest rates being conservative. And I got to account for these big ticket items that we just don't know about. I know they need to be replaced, you know?
Well,
Um,
look, I used to be a realtor,
yeah.
so I can say this: most realtors are yahoos.
Yeah.
I mean, they are.
Yep.
I used to be one. There's some weird people in the real on the real as realtors on the real estate. It's just because it's such a bit. It's so unprofessional in the sense that it's so easy to get into. Like
Mm-hmm.
anybody could do it,
Yep.
and you take a quick test, and boom, you're there.
And if
You
you're a
know,
realtor out there, we're sorry, but you're a
but
Yahoo. No,
that
I'm just
being
kidding.
said, though,
Yeah.
that being said, the beauty of it from my perspective too is,
Yeah.
and my business is the same. A lot of guys that are commercial loan brokers, they're yahoos too.
Yeah.
Okay, you can't trust them as far as you can throw them.
Yep.
Okay, but the positive of that is, if you're good and you're a person of integrity, it's
Mm-hmm.
so easy to stand out,
Yes.
right? Because people have been lied to so often that when someone doesn't, and they're like, oh my god, this guy actually gave me some advice, that's to my benefit and not his, holy mo, I can't believe what I'm hearing. Is this right? Because it just, you know what I'm saying? The vast majority are so
Yeah.
terrible. It's easy to excel. And a good realtor, like my commercial realtor, is worth his weight in gold, man.
Yep.
And the guy just, he makes us money.
Hmm.
And I wouldn't, you know, he would have to go to heaven for me to
Hmm.
switch to another commercial realtor. You know, I'm not doing it. Because the good ones that you trust and that are good, they're just hard to find. So when you find them, and I'm a guy that's real high on integrity.
Yep.
You know,
Yeah.
and
100%.
expertise. Let
So
yeah.
yeah, Michael said he's a broker and he hates many realtors. And Andre says I'm new to that has bothered me. Not enough education and training before you can call yourself a realtor. My lack of experience and knowledge has cost my client $4K. It bothers me. And if it bothers you, that's a good thing. I'm going to say it. If it does bother you, it's a good thing.
Get
So,
better, man.
yeah,
Read and study and and
yes.
and,
And
and,
that and
and
this
get
is him
better.
saying this again, that is one reason he's going through so much private education first. Hey, 100% agree with you, but also don't just keep educating yourself, take some action. Okay?
Right.
Because this is what I do is I've learned everything from one deal after the next, and I try to create a team around me so that they pick up the lack of education.
Well, you got to have a good mentor,
Yes,
right?
that's true.
I had a tremendous mentor when I got in the commercial loan business. A guy out of Atlanta
Hmm.
that first thing he told me was, Malcolm, you got to have your fee agreement tight,
Hmm.
because if you're doing a $10 million deal and you're making 100 grand,
Yeah.
people will steal from you. They'll let you do the deal. They'll take the 10 million and not pay you if you don't have it in writing.
Yep.
You can't trust anything. Trust but verify, right?
Yes.
And I had a rock solid real estate attorney, you know, that wrote a top notch, agreement. I have an NDA and a non disclosure agreement that I
Hmm.
work with, because people are sharing with me,
Hmm.
very sensitive information, right?
Yep.
And instead of using my NDA to benefit me, I use my NDA to protect my clients,
Got it.
right? Because my NDA says it's bilateral, right? It goes
Hmm.
both ways. So anything that the client shares with me, whether it's a realtor, a seller, any of the financials,
Hmm.
all that information is confidential,
Yep.
right? So it's against my own agreement for you to come to me with a deal, Randy, that you can't finance, and me turn around and flip it to another investor who
Yep.
can do it,
Yep.
right? That
So
never happens, of course.
never.
Right? Right? Ethically, it should never happen,
Right.
right? But it happens all the time, right?
So yeah. So
But I
I
have
want
it in writing.
yes. So I also want to bring up this thing about mentorship. Not everything on mentorship you need to pay for or do anything. Now, it's great that you can, okay? But I never quote unquote had a full-time mentor. My mentor was the people around me that I surround myself with.
Mm,
And how I do that is the first person I JV'd with, first person, Todd Chun. Great wholesaler, great guy.
right.
Okay. He went through me through the whole process. If I ever had any questions, I'd call him up and he'd answer them for me. Like he'd take that time out because then I did another deal with him. I did another deal with him. I ended up doing another deal with him, and so on and so forth. To me, that's the best mentorship because now guess what? I'm adding value to him by bringing him deals and
Right.
JVing with him. and he's adding value to me because by giving me the knowledge, and I'm still making money, you know? So keep in mind that mentorship does not always have to be paid for. It also does not always have to be one person. Okay.
True, true,
It
true.
does not always have to be
My
one person.
mentor, I have a mentor in the commercial investment business,
Yep.
and I have a mentor in the commercial lending business. Now, him and I don't talk as much anymore because I needed more advice 16 years ago than I
Exactly.
do now. But and there's some, you know, there's some things that I choose to do um, that he disagrees with,
Yep.
right?
Yep.
Because of I give away value that he's
Hmm.
like he would kill me for. He's like, dude, you need
Yep.
to charge for everything, you
Yeah.
know. And but anyway, it's a relationship.
Hmm.
So I can call him up anytime, and we could talk about anything. And him and I bonded over our mutual faith,
Yeah.
right? And he has a ton of mentees all over the country that he works with. But he
Hmm.
said to me, this is probably like 10 years ago. He was like, the thing I love about you, Malcolm, is no matter what we talk about, whether it's business or family or personal, whatever,
Hmm.
he's like, you don't cuss. So and it irritates the hell out of me when other guys talk and they just start da, 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 da. And that might be a little thing,
Yeah.
right? But this is like a multi-million-dollar guy and he hates that crap,
Yep.
right? So and just that little thing, and then him and I can, I can talk scripture with him. I'm a deacon at my church, and him and I can
Okay.
talk scripture for like 25 minutes and go deep, and I'm right with him. He loves that stuff.
Yeah.
The flip side of that is when I'm working on a deal, if I've ever had challenges or something, I
Hmm.
can talk to him, and he'll give me more time.
Yep.
So
It's
you
about the
got to find,
relationship.
yeah,
Yeah.
find out where that relationship works and what
Yeah.
commonalities do you have, and then you bond with people because the business is about relationships to me.
Yeah.
The better your team is, the better your connections are, the more successful you can be.
And I've built a great relationship with quite a few people in this business. I've worked with Dean Gorowski.
Hmm.
I've worked with I've had him on this channel, by the way, a few times. I've worked with Phil Blake. He's coming there. I've done some impromptu videos with him. Like his level of philosophy, and like he's an engineer guy, and he has a wholesale business. He does fix and flips, buy and holds, everything. And he's automated a lot of his stuff. And that's where I'm trying to get to. I'm trying to get my level up there.
Right,
But, so like I'm on my way to get up to him, but I still look at Todd Chun as well. And so I don't limit myself to just one person as a mentor.
right,
But at the same time, they all have something in common. And what do they all have in common? One, they've done deals, and they've done deals ethically.
right,
Okay. I don't want to work with somebody who I know is um, going behind somebody's back, or, like they'll be the first person to say, I can go to them
right,
without a contract being locked up, and
right,
I don't have to worry about a thing.
right,
Okay.
right, right, right.
So
You can't you
that is the
can't
key.
under you can't underestimate. I had a guy that we were doing an FHA loan on, and I say FHA. This FHA does multifamily.
Okay. Yeah.
Okay.
I didn't know that.
Um, yes, there's a 221D program and a 223F program through HUD and FHA.
More than
It,
5 units?
oh yeah,
5 units and above? Okay.
yep, yep. But typically they're bigger deals. They're like 2 million or
Hmm.
more, and it's like the best. It's I should say how can I won't say the best. It is the best cash flow loan program out there
Got it.
because they'll do a 35-year amortization,
Hmm.
non-recourse, meaning no personal guarantees or any of that stuff.
Yep.
The interest rate is through the floor. I mean, no one finances lower with a lower interest rate than FHA or HUD. You know,
Got it.
So I mean, they're going to be you take whatever the best rate you think you can find, and they're going to beat that by a full point. I mean, it's not even close.
Wow.
The negative of FHA is that they take a long time to close.
Okay.
Okay, but they'll do high LTV.
Hmm.
Okay, and on the DSCR they'll do like 1.15.
Okay.
So they'll do like a skinny
Yeah.
deal. They'll do market rate,
Mhm.
low income housing, senior housing, so it doesn't have to be, again, it's HUD FHA,
Yep.
but it could be luxury apartments. It
Okay.
doesn't have to be like affordable, strictly. Um, but anyway, this guy I was working on this deal. This is probably no more than 2 years, maybe like 2 years into the business, maybe 3 years into the business, and I got it, and I was working with an FHA map lender.
Mhm.
They can accelerate the process. I won't get into the details of that, but the long story short, the guy went around me,
Mm.
and I introduced, and my lender's name was John, right?
Mhm.
And I said who John was at the time. John's now long retired, but he, did an internet search or whatever, found him directly,
Mhm.
called him,
Mhm.
and said, "Hey, I want to do this deal." And John's like, "Okay, well, we were just on the phone with Malcolm like 2 days ago. Why aren't you talking to Malcolm? Oh no, I want to do this deal with you. Blah blah blah. I mean, we'll have to use Malcolm. Blah blah blah." And some loan programs, the broker is not an actual expense to the borrower.
Okay.
Okay, where you're paying the broker directly, like you do on residential. There's
Mhm.
some loan programs in commercial where the lender is compensating the broker
Mm.
out of their pocket.
Got it.
Okay, they're not ramping up their fee. If they don't
Mhm.
have a broker, they make more money, flat out. But if the broker's involved, it's coming out of their cut. They're not actually increasing the fees to the borrower. And so, example, with SBA or FHA, those fees are set.
Yep.
So if I'm doing an FHA deal, it's coming out the lender's pocket because FHA does not allow you
Mhm.
to throw fees on top of their very restrictive fee schedule.
Yep.
Okay. So this guy called the John ended up calling me the next day, and he was like, "Remember that guy we had a conference call with a couple days, Derek, so and so?" I'm like, "Yeah." He's like, "Yeah. That guy called me directly, tried to cut you out the deal, da 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 da, and I'm done. So if you talk to that guy, tell him never to call me, lose my number."
Mm.
And I was like, wow. And John's point was, if he would work with so little integrity, because I explained him the deal, I explained him the program, I set
Mhm.
him up with somebody that would do the deal, and then he would still come out and try to cut me out.
Mhm.
John's like, I can't trust the operating statement. I can't trust the financial statements,
Yep.
his personal financial statement that he's going to submit,
Mhm.
because the guy has no integrity. And
Yep.
this whole business is built on trust,
Yes.
right?
100%.
So yeah, I can't trust that guy. You
And
know,
and to that, to John, it also looks bad on you because you brought in that guy.
well,
Unfortunately.
well,
So, but he
well,
probably understood. He probably
yeah. In that
understood.
situation, because we all
Yeah.
meet guys in this business
Yeah.
who are like, it's all about the money.
Yep.
How much money?
Yeah.
It's just business. It's just business,
Yes.
Randy. I'm screwing you over, man. It's nothing personal. It's
Yeah.
just business. Okay. And like you mentioned, Todd Chun, great
Yep.
guy,
Yes.
right? Great guy. I can work with great people.
Yep.
Love working with great people
Yep.
because the real secret to building long-term profitable relationships
Hmm.
is you make sure everybody you do business with makes money, right?
100%.
So when I put my investment group together, right, that I work with on my deals,
Hmm.
I called a select group of people and I said, "Hey guys, we're going to do this, putting this fund together. We're having a meeting on Tuesday. and I was meeting at the church, matter of fact, right? And um, we're gonna do this meeting Tuesday night, and a couple of my guys like, I don't care, dude. Just tell me when. Well, wait a minute, I ain't tell you what we're doing yet. It don't matter because every time I do a deal with you, I make money. You just, you know, I'll show up. Just tell
Yep.
me time and place,
Yep.
right? And if you endeavor to make sure everybody makes a minimum what you promised or more.
Yep.
Like, well, wait a minute, I thought I was getting this, and you actually threw a little bit extra in there. Okay, great. This is actually better than what I expected. And if
Hmm.
every time you do business with people, they make money, they will never hesitate to join you in your endeavors or recommend someone else
Yes.
join you.
And that's where building the relationships come in handy because say I'm a wholesaler and I'm making my buyers money by giving them properties that are good margins, things like that. Well, guess what? When I want to do my first fix and flip, guess who I'm going to come to try to get some connections to see if I can get some cheaper prices. Hey, where did you buy this? Where do you get this? Can you hook me up with your wholesaling connection for materials?
Right. And
Whatever.
sometimes those people won't be the cheapest people,
Right.
right?
Yeah.
I mean, there's
But
I
they'll
think
get
it was
them done on time.
Zig Ziglar once said, "Good things are seldom cheap, and cheap things are seldom good."
Yep.
Right? And it's so true. You know,
Hmm.
people you can't have quality, speed, and cheap.
Yep.
Right? You can have two of the three, but not
I was,
all three.
I was just thinking about that saying, but I couldn't figure out exactly how it worked. But you
Right?
literally read my mind.
It can be cheap and fast, right? But it's not going to be good, right?
Right.
And if it's good and fast, it's not going to be cheap, right? So it's like, you know, it's so you got to pick your poison, if you would. And if you got good people, they may not be like my real estate attorney that I use is by no means the cheapest guy in town,
Mm-hmm.
you know, but he's the best guy I know, and I've known him like 30 years,
Mm-hmm.
almost, like 27, right?
Wow. Yep.
There's no one else I would use for that. I don't think about what he charges me. I know he's going to do what I need him to do. His advice is going to be top
Yep.
notch.
Oh, by the way, I'm taking that clip that you just said. We're making a YouTube short out of it. All right. My VA, Josie, if you're listening, that what he said about the three things, make a short out of that right there. That's gonna get hits right there. I'm gonna tell you right now. So
And I
because
can
it's the truth. It's the truth.
It's
You
the
cannot.
truth.
I mean, you can. There's three things, and you can only have two of them. That's it.
You cannot have all three. It's guaranteed. It's just not going to happen. And it applies to everything,
Yeah.
right? It applies like a
There's.
restaurant.
Oh my
It
God.
applies
Yes.
to everything, right? It's like,
Oh, I'm
what's your
shaking the vinegar.
priority? You know what I'm
Yep.
saying? Are you going to give
Yep.
up speed?
Yep.
Because if you want it cheap and good, it certainly ain't going to be fast.
Right.
We'll get to it when we get to it.
So we're coming up to the wrapping up here, and I'm very glad that I got you come on here. I really appreciate it. Now, how can people get a hold of you, contact you if they want to do a loan with you? They want to just pick your brain about maybe they have a deal that they want you to either fund or want you to underwrite to help them out, whatever the case may be. How can people get a hold of you?
Well, our 800 number is
Okay.
800-598-5530. I'm
Okay.
extension 1. My local number, direct in Michigan, is 248-579-8175, extension 1. Both numbers work. It goes directly to me. You
Okay.
can find us on the web at castlecommercialcapital.com. We have a mobile lending app for your phone.
Okay.
So with our mobile lending app, you can pre-qualify a deal,
Mm-hmm.
put in the purchase price, the budget, the expenses, what the NOI is, and it'll let you know if the deal qualifies for financing and what's the maximum loan amount. So rather than having to chase down your loan officer to figure out you got a viable deal or not, you can do it right on your phone. And we have 10 loan qualifiers on our app.
Okay.
So whether it's long-term commercial bridge, multifamily, bridge, single family, single family long-term, single family, fix and flip, SBA,
Yeah.
all of that kind of stuff we do. And when you go on the Google Play Store or the Apple App Store, just put in Castle Commercial Capital.
Got it.
You'll see our blue and gold logo. Easy
Now
peasy.
we have those links in the description, by the way. Okay. And so if you have
and our
tried,
YouTube channel.
yes. So your YouTube channel, we have all those links in the description. Check out his YouTube channel. Happy to, have it. Happy to have you here on mine. But all the links in the description, even for the app, for the Google Play Store and for the Apple Store, the links in the description. I think the app would be awesome to have. So check it out. If you're especially if you're trying to underwrite a deal. So,
right.
Yep.
Right. And it's not, and obviously, the way our app works is, we're qualifying against our programs, but in every calculator, we're actually qualifying it against anywhere from 3 to 5 loan programs. Okay.
Awesome.
So when you run a deal through our app and it says not qualifies, it's probably not going to qualify with anybody.
Okay.
You know what I mean?
Yep.
So, whoever your favorite lender is, you can even use our app to qualify the deal and then take it to them, and not know you're not wasting your time,
Right. So, I really appreciate it. And I'm trying to see who wrote this, but they said, thank you for tonight. It was a great conversation. Andre wrote this. Thank you. I really appreciate that. And so with that, Malcolm, I'll bring you down. Just stay in the background for a moment. And we'll talk after. All right. But I really appreciate it. Thank you. Thank you, Malcolm. Thank you, everybody who's listening, who's out there. If you please subscribe to the channel, hit like, helps the YouTube algorithm. Check us out on YouTube. If you're watching from the Facebook group, it's at Randy Stedwell on YouTube. Please check us out, subscribe, and go from there. Now, if you are not getting my emails about these, please let me know. Leave a comment with your email. I'll add you to my email list. I'm trying to send these out as much as possible and kind of go from there. Thank you, everyone, for listening. We're going to next week. You know what? I'm going to try to bring on Terry Penny next week. I'm going to talk with her, see if her schedule, not next week, but the week after. We're doing every other week. All right. So thank you, everyone. I appreciate that. Appreciate saying good show. Have a great day. And let's all do deals together.